Hi, everybody. Thank you very much for joining us. Just while we're waiting for a few more people to come in and take their seats, I'd just like to draw your attention to the screen. We have just a nice little video to play that kind of introduces why we're all here and the topic of education finance. So hopefully it will play. Let's see. And I'm going to have to play it not full screen because of some tech issues, but... So good afternoon, everybody, again. And thank you very much for joining what we believe, and hope you also agree, is a very interesting and exciting topic on education finance and trying to mobilize more investment into the low-cost, non-state education sector. So, my name is Rachel Tabor. I'm the moderator for today's session. And I come from an organization called Opportunity EduFinance, which is part of the Opportunity International Global Network. For those of you I haven't met yet and who aren't aware of Opportunity EduFinance, I'll just do a quick little elevator pitch to get you kind of aware of what we do. So We're a global NGO with the mission of trying to improve access to quality education in low and middle income countries. And we do that two ways. So through leveraging social finance and then through providing direct training. So on the finance side, on the left-hand side here, we have the Education Finance Technical Assistance Facility, which partners with socially focused financial institutions across Africa, Asia, and Latin America. And we help them to develop sustainable education finance portfolios and to mobilize their capital into low-cost schools and to parents of children who attend these schools in low-income areas in the countries we work in. And we also try to create this idea of the whole education ecosystem and the market opportunity that that presents for financial institutions. So far we have a network of 156 financial institutions and growing across those three areas I mentioned, so Africa, Asia, and Latin America in 31 countries. Then on the school side, we also work to try and improve the quality of education through direct training. So we have our 3-year education quality program that works with the school leaders and teachers within that school to basically come up with a 3-year development program. So for the school leaders on things like financial management and how to run their school. And then we provide training to the teachers so that they can become teacher mentors and bring back quality teaching practices back to their schools. So yeah, that's a bit of a background about us and Opportunity EduFinance. Before I hand on to these wonderful panelists, I thought I'd just take the opportunity to give a quick introduction about why we're all here today and provide some context behind the need for education finance, because I know it's a topic that comes up quite a lot, even throughout some of the discussions we've had at this EMW. But it's something that often doesn't get kind of sole focus as to why it's important to increase capital into this specific sector. So just a bit of context here. If we look at the global picture, 1 in 5 school-aged children around the world aren't in school. That equates to 263 million children across the globe that aren't accessing education and aren't learning, which is an obvious problem. And when we bring that back to SDG 4, the goal of increasing access to quality education and equitable education by 2030, it's looking like it's sinking further and further away unless we try and do things to improve this and improve this statistic. So an interesting fact is that the top 15 countries in terms of proportion of their government expenditure that goes on education is actually low-income countries. However, we see time and time again that this isn't enough. So government spending constraints limit their ability to provide basic education to the population of school-aged children, especially in more low-income areas, more marginalized areas, and more rural areas. So this is where the non-state school sector kind of fills the gap. And it's something that's kind of interesting to talk about and something that raises a few questions. I know when I talk about the fact that we help to support the private education sector, because the idea of private education in countries such as Luxembourg, where we are, or back in the UK and in America, is a completely different notion of private education. We obviously see it's for the wealthy and super high quality. In the countries where we work, in lower middle income countries, where state provision isn't adequate, we see the affordable non-state school sector filling this gap and reaching the more marginalized populations. And we'll explain a bit more about the context of these schools throughout the panel discussion, but that's just to paint a bit of a picture. However, with this huge number of schools we have and their growing role in the education system, comes a huge need for finance to help improve the quality and capacity of their schools. So they're met with this massive funding challenge that have been operating for years and providing education, but they've not been able to grow and not been able to improve their capacity or access financial services. They're quite maybe it's quite unknown, but a very financially excluded sector in a lot of the countries we work in. And actually, it's playing a really important role and growing. So from 2005 to 2020, so in just 15 years, it grew 2 percentage points and is now providing 25.8% of education across the globe, which is obviously a huge sector that I think is important to consider. And one of our kind of expertises at Opportunity EduFinance is on the market research side. So we produce every year a state of the affordable non-state school sector report, which looks into the market research, looks into a load of different statistics, as well as preliminary data that we collect ourselves in the countries we work in. And this is where that figure that you've seen in the title and on the screen now comes from. So there's a $10.2 million demand for school improvement loans for affordable non-state school proprietors to, like I say, improve their quality, improve their capacity. And that's just one sector of the education ecosystem. Alongside the schools, we also have the parents who need money for school fees. We have the teachers, we have the suppliers. There's so many things that we often don't think about that come into this whole picture. So that's a bit of a context. I am joined here by 4 wonderful panelists who are all experts on this field of education finance. I'll just go and join. Yeah, and we'll deep dive into this topic of education finance and how we can help close that global education funding gap. Okay, so change locations. I hope you can still all hear me. So thank you, panelists, for joining us. I'm wondering if maybe we can start with just a quick, maybe 1-minute introduction from all of you. Introduce yourself to the audience, your name, role, and what your organization does. That'd be great. Steve?
Hi guys, Steve, you have chosen wisely your panel. Thank you for coming. There's nothing more important, we believe, than making sure this next generation has been prepared for jobs of tomorrow. And that's why we're so passionate about this. I founded Vartana in 2013. We are based in India and we serve mostly schools, but now students as well. So in our 11-year journey, we financed a little over 8,000 schools. Those schools would be serving something like 5 million students. And then now we're providing direct loans for post-secondary education to students, and we've funded about 20,000 of those students. So we have a portfolio right now of about $130 million. And all these numbers sound like really cool and big, and you're like, yeah, but in India, this is a small pilot project, I guess, still. So we have a lot to do. Great to be here.
Hi, everyone. My name is Purnima. I'm representing an organization called Global Schools Forum. GSF is a catalytic community of non-state education organizations, as well as an innovation accelerator and a partnership builder. Our primary focus is to improve education outcomes for children in low-middle income countries and in underserved geographies. And we do this by creating opportunities for learning within the globally interconnected community that we've built. Also promoting testing of promising solutions, distilling best practices, and diffusing that back within the wider education community, and also partnering strategically to build up the policy environment for non-state education organizations. And it's wonderful to be joining this panel of dignitaries here. Thank you.
Hello, everyone. My name is Doreen Nakaziva, Education Finance Manager, Opportunity Bank. Opportunity Bank is found in Uganda, and the bank focuses on 2 areas. We focus on education and agriculture. So in Opportunity Bank, it's a social bank, and we want to see impact on lives transformation. And so that is why we take interest in education. Thank you.
Good afternoon, and I think Steve already said it's great you're here, but I do think next time we should actually put on the slide that there's a link to climate. Is there a link to climate, to environment, then probably the room next year will be even fuller than it is today. And actually there's a very good case to be made that education actually is, it could be an important driver to help us cope with climate change. I think it's actually still one of the best investments which we can make for that, investing in schooling of girls. My name is Hans Perk. I'm the Director of Specialized Finance at Oiko Credit, responsible for agriculture, renewable energy, our capacity building program and innovation. And in our innovation department, we also develop collaborations. And one of the collaborations which we developed is with Opportunity International on education finance. Thanks.
Thank you very much, everyone. And maybe a pretty wide question to start, but one that is why we're here today and why it's important to talk about this. I'm wondering if you can, and feel free whoever to chip in on this one, if you can talk about why there is a need for increasing access to finance to these non-state affordable private schools. Don't all rush.
Yeah, thank you. If you look at in Africa, the schools focus more on the major income is major school fees, and therefore the school fees are collected majorly the school fees collection is majorly done. It's a seasonal product, implying that school fees comes in cycles because schools run in timely basis. So given that school fees are the only source of income, that means there's a constraint on the incomes of the schools. So implying that if the banks ventured into school financing, the schools are able to improve on infrastructure development, do capacity building, they're able to meet their needs as well as capital investment. So that is the reason that we need to invest in schools.
Maybe I'll just give a little bit, at least in the Indian context, kind of a macroeconomic complement to that school level reality. In India, population is roughly 1.5 billion. The student age population is about 400 million. And if you break that down, about 30% of those kids are no longer enrolled in school. A lot of that drop off occurs after secondary. 30% of those kids are enrolled in government schools, but 40%, and this is a population that is primarily low and middle income, 40% or more than half of enrolled students are now in private schools. And so how did these private schools come about? Basically, people were dissatisfied with the government offering. So over the last few decades, local mom and pop shops have cropped up all over the place. Usually it's maybe a woman who runs early childhood development and a couple spare rooms. Then the parents say, no, you should add kindergarten, then you should add first grade and so on. This plot of land that was probably family agricultural land at some point and is now on the edge of a city. They keep adding a few more classrooms. And when the quality is good, they fill those classrooms up. But at some point, it goes beyond the means that they can provide. And as Doreen mentioned, the students tend to pay throughout the year. There's not big lump sums that come in. So these schools need financing. But they need financing that's much larger than microfinance loans tend to be. These would be clearly in that SME finance category. So our loans tend to be in the tens of thousands, in some cases for bigger schools, hundreds of thousands of dollars. And so they wouldn't have their needs met by microfinance institutions. And then the banks and traditional finance companies don't really see schools as a business. They say this is a nonprofit, like cute little philanthropic activity. So they really are struggling to get access to good quality finance. And so that need is really where we came in and said, this market is massive with a huge amount of need. Let's cater specifically to this context.
Yeah, thank you both. And you both touched on kind of the specific needs of the schools in terms of tailored financial products, which is something that's really important. A lot of financial institutions do already lend to schools or parents, but through kind of generic either consumer or business loans, which is why we're looking into kind of the specific needs that they have to tailor the products. I'm wondering, Purnima, if you have any comment on kind of what you see through the research at GSF and your experience on the specific needs of schools and the characteristics that the low-cost non-state schools have.
Yeah, I was going to answer the previous question by addressing the elephant in the room, and saying why non-state education is important. So I think you've already touched upon a couple of statistics, Rachel, but just reiterating, about 25% of global school-going children are enrolled in low-cost, non-state private schools, which turns up to be about 400 million children globally enrolled in these kind of schools that Steve and Rachel have already spoken about. In terms of characteristics, these schools are mostly standalone, started up by sole proprietors. Most of the times, these are first-time entrepreneurs who are probably not very familiar with simple processes like registration, licensing, accessing capital, filling out a loan application form, etc. And just in terms of the size as well as the fee range, these schools that we are referring to usually have a fee range of about $100 to $500 per annum, which is even lesser than a month's fee for the high fee or the medium fee loans, fee schools that probably most of us have been to. So I think that's the target segment that we are really referring to. And these schools could host anywhere between 50 children to about 500 or even 1,000 children in some cases. But I guess, yeah, I think that's a little bit of a flavor of what are the kind of schools that we are trying to cater to in terms of education financing. And just, I think, also adding on to that statistic, maybe it's worth noting that in a lot of countries, especially in South Asia, as well as Sub-Saharan Africa, including Pakistan, Nepal, Nigeria, Rwanda, about 55% to 75% of spending on education is through household financing. So that's the real need of, what why we need education finance and why we need more than MFIs, NBFCs, but also commercial banks to kind of look into this segment and start bridging that funding gap.
Great, thank you. Yeah, and you touched there, and also it was shown in the video in the introduction, kind of about the market size in terms of the number of these low-cost private schools, and also the number of students that are attending those that provide a market for school fee loans as well. Just to go beyond that, though, and it's something the video touched on, so parents and students obviously need the finance, and same with the schools, but growing schools also, as it mentioned, need more teachers, they need more cooks, more suppliers. There's a whole load of actors that feed into just the school, and the school can kind of be seen as a hub. I'm wondering, Hans, how this fits into the Oikocredit community-focused approach, and how investing in education can kind of help to build a community.
Yeah, so we indeed, so when we started with our innovation program, we designed a community-focused approach. So we actually said, what is it? What are the needs of the communities which we as Oikocredit actually don't address at this moment? So a lot of our financing, I think 80% or so, goes to microfinance institutions and SMEs and banks. And we actually said, okay, let's then see what at that community level, where those MFIs and the other institutions which we work with are so deeply rooted and they have this long experience in these communities, and what can we do there to actually address those needs. So that's how we actually, came first to education, and we indeed see that there's a whole ecosystem around those schools which generate additional business and opportunities as well to invest in. And so it's also how we came to, for example, our WASH program. So we also developed, additionally to that, a program focusing on WASH. So yeah, that's really our support. Our approach is really to look at communities and with our partners, which we've been servicing for so many years, to see what are all those additional needs, how do they interlink, and how can we actually support that ecosystem and finance them.
Great, yeah, that's amazing and something incredibly important. This whole social impact side, I know, is important for a lot of investors, and then also financial institutions as kind of a side alongside the financial returns, especially for Vartana, Steve. I'm wondering if you can kind of shed some light on how investment into the education sector can positively impact education outcomes, kind of what you've seen, what the theory of change is there.
Yeah, absolutely. Well, what we've been able to see is that there's a very vibrant market in every community, in every catchment area. You'll find schools at 500 rupees, 600 rupees, 800 rupees, you know, etc. And usually the quality correlates. And the chart I usually like to show is access and quality is the tension. And you can define access by basically the cost. And as the cost goes up, you do tend to see improved learning outcomes. But at a given price point, what you'll see is there will be some school promoters or owners who do a better job at 800 rupees a month. And so you tend to see that the families identify that and tend to go to those schools. And that's where the financing for us is crucial, because we really try and identify at any given price point, what are the schools that are the best, that are getting filled up and need to expand their capacity. And we then help them build additional classrooms. And it puts a little pressure on the mediocre providers or the bad providers at 800 rupees a month, because they either need to get their act together and improve, or they can lower down and compete at 600 rupees a month. So we do have a bit of faith in the market mechanism, and we have been able to validate that through some, you know, too costly to be sustainable on the universe of the portfolio. But for, you know, we've done some measurements on the improvement of learning outcomes and seen very good results. And I'm sure that you guys all probably know about how correlated better education is to all kinds of add-on effects. Even if the kids are better educated, the health of the household is better. And all sorts of add-on benefits that come along with a better education. So again, we think this is the most important issue here.
Thank you. Yeah, and this topic of managing outcomes and measuring impact, I know has been quite a common theme throughout a lot of the panels we've had in the conference so far. Hasn't touched so much on education as of yet. I'm just wondering, panelists, if you have any insight or any opinions on the kind of educational or indicators we can be looking at for the impact of education finance on the end clients and on development in general.
Thank you, Rachel. In Africa, education is something that is very important. If you look at today, the parents' inheritance is drifting from property into now education. So, which implies that the best investment that a parent could give their children as inheritance is quality education. So that means the quality of education that is given to the students is very important for the parents. So, and how do you measure this? So in Africa, the higher the education, that means the wages also improve with the education that you're getting. So that alone, it means that the livelihoods are improved because the wages are getting better. And so we're having improved livelihood, and the economy is growing because of education. Thank you.
Sorry, go ahead. Okay. So I think it's a very layered topic of discussion, because I think when we refer to education, even if it's just K to 12, there is differentiated costs and methodology associated with assessing outcomes at the early childhood level, vis-a-vis the primary level, and now with this whole dialogue around school to work transition and youth employability at the secondary level. But and very obvious to say that the costs associated with impact measurement within the education space are extremely high to be borne by sole proprietors that we were speaking about, who set up shop and are catering to these low middle income children, as well as even for financial institutions who are just starting out to cater to this segment. So in the absence of measuring learning outcomes, I think an alternate proxy could be measuring attendance and engagement in schools. So not just levels of enrollment and how they are going up. And as Steve, you mentioned, there's a natural selection process that comes into play where parents are able to identify schools that are doing better than the others in the community, and hence enrollment kind of goes up in those schools. But also I think measuring engagement, whether that's through teacher attendance, school children attendance, I think that might be a proxy indicator. But I think in the long term, The objective is definitely to bring in as much expertise and funding and as much maturity in methodology in terms of measuring literacy and numeracy outcomes, whether that's at the ECD level or at the primary, secondary level.
Thanks, Panima. Great insights. And Hans, you had
Yeah,
some
just in total transparency, we are a very early stage. So we started in this collaboration with Opportunity about 2.5 years ago now, I think, and we have just dispersed around 20 million euros to around I think 12 organizations. So we started measuring the number of school loans and school fee loans, enrollment, aggregated by disaggregated by gender. So that's the kind of the level which we're keeping track on the outcomes at the moment.
Great, thank you. And it is a challenging area. I know we've talked in several other panels about kind of this framework for measuring improvements on clients' lives, but it's kind of more broad towards microfinance in general. And maybe there's a need for some specific framework for education finance specifically. Great. Well, we've talked a bit about kind of the need for education finance and the social returns associated with lending to the sector. However, we still see a huge financing gap, like I mentioned, 10.2 billion US dollars, and that's just for the school improvement loans. I'm wondering if we can now turn our attention a bit more kind of towards that issue and why there is a funding gap, kind of the challenges involved, either that you find Doreen and Steve directly lending to the sector, or just in general that we face in trying to channel investments towards this sector. So over to maybe Doreen to start.
Thank you. To start with, the schools normally don't keep records. Record keeping is very poor. So implying that when banks get to these schools, they don't have records. So that's one of the challenges. The other challenge is that the funds are diverted. So a school could ask for funds and could imply they want to build infrastructure, and then they end up maybe constructing homes, buying vehicles. So that still gets become a challenge. The other is that most of the schools don't have ICT programs that they use in running their schools as well. So data is not properly kept. And then now we have the non-state schools in Africa are not, most of them are not registered. They're not operating legally. So you find that the banks want to work with legalized institutions, and that becomes a challenge as well. The last challenge could be on the ownership of the schools, given that the schools do not reserve their trade names or register with the government for the trade names. So it becomes hard for the banks to deal with schools whose ownership is not clear. Thank you.
Yeah, just echo on that. I think generally the perception in most capital markets is that schools are a riskier segment. They're usually kind of fairly informally done in terms of the financial track and what have you. In India, since they have to be qualified as either trusts or societies, they're not subject to income tax returns and filings, so they don't have any of that paperwork set. So it's a little bit of an opaque picture there. A lot of lenders are also very concerned, though a huge part of our portfolio is secured with property. It is often the school property, and so most of the banks and lenders will be skeptical that you could ever, make good on that kind of collateral. And so those are the conversations that we deal with. And I think we'd done a decent job of cracking that. India is probably a little luckier in that it's a much larger, more vibrant capital market. But COVID was very challenging because it was, in fact, our two countries are some of the worst in terms of shutdowns. The government shut schools down for pretty much 2 years in Uganda and India. And so the low fee schools, couldn't collect fees and couldn't pay monthly installments. So you can imagine how our delinquencies went up, and that seriously hurt our ability to raise funding. Now we're kind of climbing out of that. So we're getting the funding that we need. It's just too expensive. So they ascribe all that risk onto us. And so we would love to be able to beat that cost down so we could also pass it on to the school owners.
Yeah, so I think indeed technical assistance to improve management of schools and formalizing them and so on. Technical assistance also to the financial institutions. So the things, for example, Opportunity International is providing like market research, really showcasing what that opportunity is. I think that's really important. There are, I think, many financial institutions who probably perceive this risk to be very high. And I don't necessarily think that that's the case, except for India during COVID. And of course, there are also very, so I think there are great opportunities as well, but it's not obvious for many.
Great, thank you. And one other thing that I'm interested to hear your thoughts on, just from my experience running a project just in Uganda, where we're looking at the schools and the challenges they're facing to access finance. One thing that came up time and time again is kind of this lack of knowledge and lack of awareness about how a financial institution operates. So a lot of the time they'd hear kind of horror stories about schools that maybe have had their school property taken away, and they don't understand kind of how a bank operates in that they need the money to be repaid. I'm wondering if you also see this as an issue, maybe Punima, is there anything that's come up through GSF, or Steve and Doreen in Uganda and India?
Do you want to go first? Because I have a clarifying question.
Okay.
No, sorry. So Rachel, you were mentioning specifically on the regulation side, or?
No, so more I was meaning kind of from the fear perspective of a school in accessing finance, and kind of that lack of knowledge as well about the application process, what the benefits would be for school.
I think from the studies that we have been a part of on both sides, on the financial institution side as well as on the education institution side, there is definitely a big gap in terms of market information symmetry. And that's because of record keeping and an intentional data record keeping kind of effort that is lacking within the ecosystem. So as you mentioned, I think on the education institution side, definitely there's something as simple as identifying a formal financial institution that is going to be able to lend to them based on their specific needs in terms of products, in terms of tenure, in terms of whether or not it's a secured loan and what they can offer as a collateral. So I think, as I mentioned earlier, on the education institution side, because these are probably first-time entrepreneurs, sole proprietors, there's definitely that gap in identifying the right kind of financial institution to apply to. Loan application processes, identifying and understanding what that means, filling out a loan application form, and then just when it comes to providing the right kind of data during the due diligence phase, most of these schools do not have the right kind of records even. And if and when they do manage to secure loans from financial institutions, managing that loan in terms of repayment and gathering the right kind of information from a monitoring evaluation perspective and presenting that back to the financial institution. I think the gap runs along the value chain for education institutions.
Yeah, great. Thank you. So I think we've touched on kind of a number of challenges there that range from school side issues, also maybe from the financial institution side issues that could do with some capacity building on both sides. Some of the things we spoke about, I'm wondering if we can dig into if we have potential solutions for these things. Maybe starting with liquidity and kind of costs of funds. I'm wondering, Hans, if you can talk from OICA's perspective about how mobilizing capital into financial institutions can maybe help to solve that issue from an impact investor perspective.
It's clarify.
Rephrase.
Yeah.
So specifically, what role does OICA credit play in enabling the mobilization of more capital into the education sector? How do you support financial institutions to do that?
Yeah, with providing them loans to actually on lend to schools and to education finance loans, for example, to Steve, which I just learned this afternoon. So that's what we that's what we do. Yeah.
Perfect. Yeah, so that's one. And that's something that we're trying to increase more of. It's a huge issue that we see time and time again with our financial institutions, whether it be the cost of funds, the lack of funds available, and it's something that's really important that I think we should try and drive more capital to the financial institutions that have the capacity to then on-lend to the end clients. Maybe another topic on the school side issues, Doreen, you can talk about.
Yeah. Thank you, Rachel. There's something else that the banks are not very aware of. Looking at the loans, most of the times the banks have scheduled loans to peak in the wrong cycle. What do I mean by wrong cycle? Schools have seasoned cash flows. The cash flows flow in seasons. That means termly seasons, 3 times in a year. So if lenders schedule their loans to peak monthly, it becomes a problem. That means they will have low performing loans because the loans will fall due in perhaps outside the school cycle. That is the holidays, and the school owners will not have the funds to be able to pay the loans. So if the banks could know how to, through capacity building with Opportunity International, the banks are enabled to know how to handle school improvement loans. So that means the loans are set to peak 3 times in a year during the active school cycle. So that makes the risk on the loans very low. Thank you.
And Purnima, I know GSF has done a lot of research into kind of the need for a global education fund, but alongside the capital that needs to be mobilized into financial institutions, what can you tell us about kind of on the school side or the technical assistance and capacity building side that is needed?
Yeah, I think I might just want to give a little bit of an introduction around what this Global Education Fund that you referenced is all about. So I think a couple of months ago, we started out with a feasibility assessment of understanding what is the scope of setting up a blended finance fund for education, which will look at servicing loans for non-state education actors in about 9 countries in the Global South. And we did this feasibility assessment actually in partnership with Vartana Kaizenvest, which is an education-focused private equity firm, as well as IDP Foundation, and it was funded by Convergence, which is a blended finance organization with funding from the Swiss funders. And I think what we identified as major challenges is mostly everything that we've spoken about, but on the investment side, on the financial institution side, is the cost of capital that they are able to raise capital at, and then on lend to education institutions, which in some cases we found was the interest rates were going up to 30 to 40% per annum from the financial institutions to education institutions, which is very, very high to kind of keep up with. And then when that funding was deployed, how was it absorbed by education institutions? And what was the opportunity to link it back to education outcomes in terms of learning outcomes that we spoke about earlier? So we came up with a roundup around, setting up an investment fund alongside a technical assistance facility under the $75 million first close blended finance fund, where the investment side of the fund is going to be looking at increasing access to affordable capital and incorporating mechanisms like currency hedging, first loss guarantee, and blending finance through concessionary capital to provide access to the necessary financing for education-focused FIs. So we're trying to tackle that issue of cost of capital through the investment fund. And then we are also looking at being able to reduce transaction costs by building market information symmetry, generating evidence around activities, and sharing those learnings back with FIs and EIs. And then on the technical assistance facility side, we're trying to work with financial institutions to enable them through local partners like Opportunity, actually, in building a pipeline of education institutions that they can then on lend to. And also working with service providers in some cases, which are financial institutions themselves who are lending to this group to improve their loan readiness and their ability to manage loans when they're able to secure it. I think also another thing that we really wanted to emphasize on through this fund was what is the opportunity of linking loan agreements to outcomes where they're possible. So not really venturing into a separate outcome-based contracting mode, but where possible, embedding terms linked to learning outcomes within the loan agreements that financial institutions are actually signing off with education institutions. So really three-pronged. One is aimed at reducing cost of capital through the investment fund and raising that capital to on lend to the financial institutions who can then lend it out to education institutions. And on the technical assistance side, capacity building for FIs and EIs, as well as outcome-linked finance through embedded terms within the loan agreement and keeping that as simple as possible, all with the immense knowledge that Steve has been able to share through his experience on impact-linked finance.
That's a nice way of saying we've made every mistake possible in the book. And so thank you. Happy to pass that on.
Yeah, maybe we can talk a bit about those social outcome lending later on. But Steve, one thing you mentioned as well that I think is important for us to try to address is the risk or perceived risk, I guess, of lending to schools. What, in your opinion, can be done to kind of reduce that or reduce the perceptions of the risk at least?
Well, yeah, I mean, certainly, as was mentioned, I think there's a role for people that have funds and want to kind of grease the wheels of the market to take a risk mitigation role, be that in guarantees or in some kind of structured finance where they're taking a higher risk tranche and making the bulk of the funds more affordable. The other thing I think is, like any risk, having the data and the cycles to show that this is not as risky as people perceive. And I think we were on a very good roll there until COVID hit. COVID kind of confirmed the worst fears that under the right circumstances, everything can kind of go to pot. And we hope that that's a very rare, people talk in India about, black swan events, but in India, there's a black swan event every 2 years. So those are white swans. And then a black swan might be kind of unusual, but I would say COVID is like a purple swan. Like, I think that just doesn't occur too often. You can't underwrite for COVID or these kinds of things. But if we look at outside of that track record, what I always tell people is schools are so stinking stable. As an SME business, you don't have many businesses where someone makes a purchase decision and then just kind of repeats for the next 10 or 12 years. I mean, it takes a lot for a parent to move a child and disrupt their life and change them to another school. So when things go wrong in schools, you see like a slow motion train wreck, and you can mitigate that. So in normal circumstances, I feel if you look at all the black swan events in India, our portfolio has actually been much more consistent than microfinance or SME finance or anything. Just the purple swan was a killer.
Yeah, and I'd just like to echo that point on schools being long-standing, sustainable businesses. Even if they're not making so much of a profit, they continue to operate year on year because there's the need for education in the communities. If we think about the schools that we attended ourselves, probably the majority of us, those schools we attended from primary to secondary still exist. And it's the same, I know in Uganda and most of the other countries we work in, we see that same thing. One last point maybe on this side of solutions that we can talk about. And Doreen, I'd be interested to hear more from you on this. I know Opportunity Bank Uganda do a lot on the capacity building side for the schools directly. For example, on helping them become registered and helping them with financial management. Do you mind explaining a bit more about that and how you've seen it help schools access finance?
Yes, for the solutions that we have, the issue of non-registered schools, as a bank, we work together with the school owners because most of the school owners don't know the process that is involved in getting the schools registered, and they don't know that it's very easy to get that done. So as a bank, we partner with them. We have capacity building workshops where we take them through the process of getting the schools registered, legalizing the business, the entities, and through that, we link them with the districts and the Ministry of Education to get the licensing done. So eventually the schools get legalized and they operate under the standards, the required standards of the government. So the statistics that was given by Rachel earlier, that we have about 25% of non-state schools on the market for education is a bit underestimated, given the fact that most of the schools are not registered. For example, there's a project running in Uganda called the Mtena Zone Project, and there are we have 60% of the schools not registered, and only 40% are registered. So the statistics that were shown do not get up to the 60%, which is a huge number. So implying that the demand for education is huge and the market is wide. Looking at such statistics, if the state has the schools, the non-registered schools in their record, that means that we could have a bigger number compared to what we have right now in the market. So the other solution we have, look at most of the banks could not know how to handle the school improvement loans. We have tailored products just for the schools or the education sector. Given the fact that they are a unique sector, they need unique solutions as well. So in the unique solutions that we have is the repayment cycle that flows with the cash flows. So that makes it easy, and the risk is very low on schools if the loans are taken in the right cycle. But the risk is high if they are on the contrary set in a different manner. Yes, so investment in schools is just a great idea.
Hans?
Yeah, that brings me back to the point that I said on your question, what is it, what Arco Credit is doing? I said, well, we're just providing loans because we think it's a good business. And that's what I also, so I'm kind of challenging my own colleague panelists here, because at the same time, we're actually saying, yeah, but we need a blended finance solutions to actually buy down the risk. And then I get a bit confused. So we actually think we are providing those loans to partners which we've been working with for many, many years, who often need the capacity building to better understand that market, to develop the products, to build that pipeline of schools who can actually take off those loans. And then we actually think, yeah, that risk seems to be, more or less, or even better than what is in the rest of the portfolio. So if we then at the same time say, but we need a blended finance solution, I think, how are we then going to scale to that 10 billion? So that's, maybe that's to the audience or to my colleagues here, but.
Yeah, and that's the important question. I don't know if anyone has any insights before maybe we can hand over for some insights, comments from the audience. Yes, let me get a microphone and I can pass it around.
Thank you about discussing about the black swan. Anyway, my question actually is, it's a question and a request. Are there documented case studies about what you've shared that we can take a look at? I mean, if we go back to our respective countries, I'm really interested. That's one. Do you have a very clear case study or business case on this so I could look at it? Secondly, and then the question is specifically for Opportunity Bank in Uganda. What was the performance so far when you look from a product perspective prior to pandemic? I mean, I heard so good news about what you said. I mean, I didn't hear. Of course, we all discussed for polio at risk, blah, 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 blah. But what exactly is, was the performance prior to the pandemic? And the other thing too, with the Oiko credit, are you looking at expanding in partnership with this partner with other areas in Asia? I'm from the Philippines.
Great, thank you. So maybe 3 parts to the question.
Yeah, so the last question, that's easy to answer.
Yes, you go first.
So we started in a couple of countries in Africa. We expanded to our colleagues in Latin America. And we now also started collaborating in Southeast Asia. So in Indonesia, I think, is the first country in which we started the collaboration with Opportunity International.
Yes, and the first part of the question was great and my favorite kind of question because it's also easy to answer. Yes, we do. And we can share that with you. I can direct you also to our website. It's opportunityedufinance.org, which also has the report that I mentioned, the state of the affordable non-state education sector, which details the size of the market in all the countries across the globe, the lower middle income countries specifically. Yeah, there's a huge data set I'll point you towards, and then also the case studies. We can talk a bit more about the project that Opportunity Bank Uganda, as well as some of our other partners have in Uganda, which is great. But over to Doreen to answer that second question on experience during the pandemic.
The experience prior to COVID, the portfolio was doing pretty very well. The risk was below 1%. And the risk, when COVID came, there was a little shaking here and there, but now we have stabilized again and we are getting better because now the pandemic hit Uganda for 2 years and schools were closed over 2 years. So after the reopening, we needed to refinance again the schools to do the renovations, school improvements here and there prior to the school opening. And the loans had accrued interest, but right now the economy is getting stable and the portfolio is also getting much better. So I can still confirm that that education portfolio is a very good portfolio, and the risk is low if well structured. Thank you.
Thanks, Doreen. And yeah, just to echo that Uganda had, I think, the longest period of school closures in the whole globe. So 2 years of schools being completely closed and education not provided. I see some more hands. Yes.
Thanks so much for the panel. I'm Pranav from impact measurement company 60 Decibels. I had a question for you, Steve, as you were speaking, and Hans, to your sort of contradiction that you sort of highlighted between it's a really exciting opportunity, but also we need a blended finance instrument. And, you know, Steve, early in the conversation, you mentioned that in India particularly, and maybe this is true for other markets as well, private schools need to be sort of trusts or societies where technically, and I might be wrong, so please do correct me because you're the experts, they're not supposed to be for-profit entities. They're supposed to be non-profit entities. So on the one hand, I imagine one of the reasons banks are a bit nervous about it is because they're like, this is a repeat business for a long period of time, and it's non-profit. So how is there a revenue generating mechanism to which the regulatory response is probably, we don't want education to be a business, we want it to be education focused. So I was just curious if there's been any thinking about whether there's a regulatory answer to that of like sustainable businesses, or just curious if that's probably one of the reasons that contradiction exists.
Yeah, I'd say definitely that's part of the mix, and education unfortunately tends to be a pretty dogmatic kind of field. You can get 5 people in a room, there'll be 7 different opinions, very strong ones on policy and how that should be done. And I think the idea of having schools in India as a non-profit is a good, noble intention, that it not get, spoiled by the profit motive. But as I always tell people, these kinds of rules for someone on the ground, there's any kind of savvy ways to work around that. And so it means primarily the impact of this. And actually a nonprofit can make profits, they just can't extract them, right? Per se, but you can pay yourself a salary as a school owner. You can own the land and rent it to the school and pay any amount to you. So there's all kinds of ways of extracting that. So functionally, how that impacts the sector is equity doesn't go to the sector because the investors won't come and put equity in if they can't get that equity out. Which actually kind of makes the lending industry very nice, right? Because nonprofits can borrow. But that perception is there, and that's part of what we have to battle with. And I think, again, the thing that's helped us in India is the track record. It was very, very difficult to source capital in the early years, but now that we've established a track record and people, see the evidence, the NPA levels prior to COVID, and that's getting better now. That's, I think, the best thing to prove it out.
Thanks, Steve. More questions, comments? Yes, Dennis.
Okay, my name is Dennis from National Bank of Kenya. My question to the panelists is, how do you perceive succession in these private institutions as a risk towards loan repayment? Thank you.
Succession for the school owner, you're saying? Yeah, that's a great question, because a lot of these are very personal, and that school is almost an extension of this individual. And so we definitely have a red flag on a school owner that's getting up in age and doesn't have that clear line of succession. A lot of time the kids they're interested to be coding, not to be running the traditional school in the hometown. So I think that is a critical issue. One thing that we've seen quite a bit in India is there is not a small number of school transfers. And now the government, these private schools need to be recognized by the government, and they don't just hand those out to anyone. So there's actually a market now for people who want to start a school, but don't have the recognition. And so they will come in and acquire an existing school and kind of repurpose it. And so we have had cases, since all we do is schools, we're now kind of an investment banker for schools. And we have facilitated those kinds of transfers in those cases. But yeah, sometimes there's kids that are taking the baton. Sometimes succession is an issue. Great observation.
Yes, another question here.
Thank you. Great discussion. My name is Lydia from Opportunity International. So far, the discussion has been on the supply side in terms of how we work with schools. But to be able to give those quality education, parents should also be able to afford education. So from your perspective, what are we doing also at the demand side so that we can bridge the gap? Because I know, particularly for parents, we talk about cash flow. So it can also be a big issue when it comes to who, in terms of the boy-girl education, who is allowed to go to school and who is supposed to stay in the house. So what are we doing to bridge that gap at the demand side?
Great question. And maybe Doreen can start with that, talking about your work on to support the parents and students.
Yeah, thank you very much for the question. Looking at education space, education is it's an ecosystem, and so if the financial institutions are playing in the space, it implies that they do not have to focus only that institution alone, but there are many players along the value chain. That does not limit the parents from getting school fees loans, because for the parents to keep the children in school, they need to have school fees loans, and then they're able to provide the income to the school in a timely manner. So the school is not inconvenienced, as well as the parents are also happy that the children are kept in school. So for banks and microfinance institutions, you can get a huge market in one space. So if you targeted looking at the players in the education space, just in one school, you're able to get, because each learner has a guardian. So that's an opportunity to give them loans and as well as finance their businesses. So apart from the learners themselves, we have the teaching staff. So implying that you could still advance facilities to the staff to motivate them to keep in school, rather than the teachers looking for money elsewhere. That means their focus would be in the schools to give quality education while their needs are met through financing by the finance institutions. So still in the same space, we have suppliers of goods and services. So they could give trade finance to the suppliers as well as guarantees. And that means the supply is provided on time and there's no interruption within the school operations, because every need is catered for. And then not stopping at that, there are also learners in the same setting. So what do we do with learners? The learners could open child saving accounts. That implies that the children can be able to save their money at an early age. At the same time, be given financial literacy on how to manage finances. So in the education space, there's much that we can do. So just in one institution, you can be able to meet over 1,000 customers just in one school, because the players are very many. Thank you.
Thank you, Doreen. Any other final questions? I know we're running a bit short of time.
Rachel, I think there was just a comment by Pranav, and I think Hans also kind of commented on, hinted at that, but I think in terms of the blended finance need, I don't know if it's a macroeconomic climate question where, different countries facing different inflation rates, and also what is the source of capital for some of these financial institutions, which is raising the risk of currency fluctuations. So I might connect offline to understand how we can do this without the need of concessionary capital. But in the meantime, I think where there is macroeconomic risks in specific countries as opposed to others, I think this model of blending finance with philanthropic as well as concessionary capital, as well as private capital, is something we thought was a good mechanism. Of course, not a long-term solution, but a bridge funding kind of approach.
Great, thank you, Purnima. And maybe before I kind of wrap the session up with a few key takeaways of this session, just one final question, and it's quite a big question, but maybe if you can limit it to just the key nuggets of advice that you have for potential funders or investors looking to get into the education sector. If anyone's willing to take that question to start with.
Just do it. Figure it out, get busy, put a lot into education. It's the most important thing. And if you want to talk offline, I can share all the mistakes so you can avoid those.
Okay. For the potential investors, education is the way to go. Looking at the statistics that's showing that non-state schools, the demand for education is growing larger and bigger. So it's clearly the market is there. And so you assured return on investment. In Uganda, I could say that schools are not just looked at as social enterprise, but also they're profit entities. So with the capacity building, we support the schools to know that this is not just a social responsibility, but as well as a business as a whole. So the school owners are able to realize profits from their ventures. Then for the banks, education is a space that you have delayed to play in. So I could encourage as many banks and microfinance institutions to play in this space. It's a very clean space that you can play in. Thank you.
Hans, any final?
Yeah, I mean, Steve already said it, just do it. And I think it's the basis of probably everything, education. So that's where we need to start. And I started with saying, if we want to do something really serious about climate change and our environment, actually it starts with education. So just do it and call Credit. Or Opportunity International. If you're an investor like we are and you want to build a great program, then I think Opportunity International is still open for other partnerships, isn't it? Yeah. Great.
You'll always be our favorite though, Credit. Purnima, any last words?
My 2 words of wisdom is speak to these panelists. I think they've been there, they've done it all, and they'll have a lot of learnings to share from being on this side.
Perfect. So yeah, I guess the easiest sell we've had in this panel is on the importance of education. We all know it. We're all in this room today because we've had the privilege of attending school, having education that we have had. However, just to bring us back to the kind of first stat that I talked about, 1 in 5 children across the world haven't had that opportunity, do not have that opportunity as we speak. But there's room to help improve this and to reach SDG 4. One way which we all believe we can do it, and we've seen it time and time again, be successful in getting more children into quality schools is by investing in the non-state affordable education sector, which is growing. So there's a huge demand. There's a huge market there, huge social returns as well. There's challenges to lending to the sector, which we've talked about, and it requires kind of this joint approach to try and solve these challenges and think of innovative solutions to do that. So we're all sticking around for the rest of the panel. This is our favorite topic to talk about. So if anyone has any more questions or insights or your own experiences, please come find us either after this session or we'll be back in the Agora later on. We'd love